This whole Evergrande crisis, how are you viewing it right now in terms of the broader markets? Do you think that anything that we're seeing in the credit markets, is that going to lightly spill over to equities?
Yeah, I mean, we do think that the government has actually been very proactive and early in containing, in dealing with this. For now, we think there's obviously a company-specific issue here, and the damage has been done to the sector as well. So we're monitoring the space, but we still remain, very much bottom-up, fundamental, company by company. We're sort of assessing it that way right now still.
Sure. I'm just taking a look at some of the best performing stocks in the CSI 300 right now, Nicola, and it's really kind of the old China stocks, right? If you're taking a look at the industrials, like the steel makers, these rare earth diggers and aluminum producers, do you think that these old China stocks are now kind of the new plays when you look into the mainland?
Yeah, I think it's sort of, there's that long-term and short-term dynamic at play here. So our long-term view on some of sort of the companies and stuff that we like has not really changed. Our view of China hasn't changed that much. We haven't wildly changed our portfolio and our positions. But in the shorter term, obviously, we do see a lot of value in the market in these sectors you just mentioned, the traditional sectors where expectations and valuations are low. So we're making some nimble moves to complement our longer term holdings. And one of the areas, for example, is on transportation and the container shipping sector, right? It's been very underinvested for many years. And there's this sort of like COVID demand recovery, and it just takes time to build ships. So you're seeing sort of a bit of a short-term dynamic at play here. And you mentioned as well, on materials, our resource team has been positive actually on the aluminum outlook for some time. So, my colleagues have been buying the aluminum stocks, and we think that, it plays very well on the tight supply dynamics. And now you've got sort of also some disruptions and demand recovery here as well.
And you talked about how you're not making wild swings in the portfolio right now. Is that the same when it comes to Chinese tech as well? Where are you in this debate of whether now it is time to buy in on some of these dips, because the valuations have gone down so much, and this correction is now opening some opportunities for people? What do you think?
Yeah, I mean, I think these companies do need to adjust to a more regulated environment. And so we're considering all the possible scenarios. We're adjusting our models. We're talking to companies where we acknowledge that the market has also in the short term reacted very negatively, very quickly over this uncertainty. So we're still focused on finding the underlying value in this sector. But in the longer term, we do think, again, with the government ensuing this healthy environment for sustainable growth. For the incumbents, it's actually, training them to be genuinely focused on value creation to all stakeholders, and a more level playing field and competition also allows for innovation and more companies to emerge in our space. So we actually we're sort of watching the space very closely.
Okay, so in terms of A and H shares, what do you prefer more now, Nicola?
We actually invest in both, and we really don't sort of have a preference over either. But the A shares does have a lot of that more the SOE material weight in it, whereas the A share obviously has just a lot more. Or the Hong Kong market overall has more. The ADRs are more tech, etc. So there's a slight nuance and difference. But yeah, no, we think we look at the market as a whole right now.
And how are you viewing in terms of how supportive any kind of PBOC announcement on easing is going to be for equities? Because we were hearing from the PBOC just last week saying that they think liquidity is looking pretty balanced for the next near term. Do you think markets are overestimating the prospect of some type of triple R cut and how supportive it could be?
Yeah, it's a fine balance, right? Because obviously there was a lot of money that came in to support the COVID, the pandemic that we just saw. But we do think that overall, they have bullets, and so in times of great volatility and uncertainty, they will. We think that they have the room to step in, but at the same time, it's we're not there's that taper, the longer term, the normalization as the economy is normalizing. We're expecting sort of, the economy and to also provide some of that support as the companies grow in their earnings as well.